Let's get some business news now, and joining us is Peter Switzer, the founder of the Switzer Report. Pete, good morning to you. So I tell you what, the heat, it's well and truly come right off the buy now, pay later sector. But is PayPal now coming after Afterpay and Zip?
It looks like they are. That they've got into the buy now, pay later space. They've now also introduced a credit card, which PayPal never had before. Zip's got a credit card, so is Hum, but Afterpay is basically a pure buy now, pay later business. And I just think what's happened is that the incumbents, the big players out there, like Visa, MasterCard and PayPal, they've seen the growth of Afterpay and Zip and whatever, and so they're basically just going after all purchases and giving them a big range of options. Apparently credit cards are becoming popular again. And my point is this, Pete. Afterpay is down about 40% since February when tech stocks got sold off. Zip is down about 50%. And so some of that sell-off is just purely this rotation out of tech stocks. So maybe the sell-off has been exaggerated, and eventually people will turn around and say, look, they've been oversold, we'll buy them again. But they might not hit their all-time highs for a long, long time because they were probably overbidded in the first place. But what's going to happen with PayPal coming into the market? America in particular has a really small exposure to buy now, pay later compared to Australia. So PayPal will, in a sense, broaden the market. And so a lot of these companies will benefit from the fact that more Americans will start using buy now, pay later. So Afterpay and Zip and others will benefit from the fact that it's opened up to the market. But in the short term, all these new ones coming into the market are certainly threatening a space that Afterpay and Zip had basically to themselves for quite some time.
I tell you what, if investors jumped in when Afterpay was, $150 a share, I tell you what, they've lost some money.
That's right, and the same goes with Bitcoin. The big Bitcoin players, they're under pressure at the moment.
Well, on that, Bitcoin, it's dived on FBI raids on those ransom criminals, hacker ransom criminals.
Yeah, and isn't it great to see that the good guys are actually striking back? And the thing is this, my view on Bitcoin is it's like it's limited. So it's like, imagine pink diamonds. Pink diamonds are limited, and some people really care about pink diamonds and will pay a lot of money for them, and their price jumps all over the place. But the big problem with Bitcoin and other cryptocurrencies is that they are being used for tax evasion, terrorism, and criminal activities. And so I think it's actually extraordinary. I think politicians have absolutely lacked guts with all digital disrupting businesses. You know, the fact that everyone wanted Uber to come along and take on the taxi industry, but all the Uber drivers are not really insured properly. The risks are there in case they have a car accident. Same with Airbnb. You know, people going to these wonderful houses around the country. We're not sure whether they've got the same kind of protections and insurance that you might get in a national hotel. So politicians have never had the guts to make these digital disruption businesses behave themselves. And Bitcoin's a classic one. And it's great to see that the FBI now is throwing their weight in. Now the big companies are being terrorized. That's the bottom line. JBS, the big meat producer, and then Colonial Pipeline, which drove up gasoline prices in the US. It's good to see that big companies are now saying, hey, this needs to be regulated.
Well, I tell you what, it's gone from 60 grand US to 30 grand in the past month, Pete. So that's quite a drop. I wonder if it's going to head back towards the days when it was $5,000, $6,000, $7,000 for one Bitcoin. There probably will be a lot of buyers if it does that.
Yeah, I think so too. I just think that regulation doesn't necessarily have to undermine the value of Bitcoin. But let's imagine that 50% sell-off is made up of the criminals who needed it for their activities. Yes. And of course, then the speculators as well. So what we're seeing, there will be a price for Bitcoin because it is still a limited product, and the tech industry like to use it. But I do think regulation is going to take the wind out of the sail of the price of Bitcoin.
Okay, business investment at record highs, Pete, but can it stay that way?
Yeah, I think it can. The story in the AFR today was around the fact that there's going to be about 9 or 10% of businesses that are going to struggle, and let's just try and pinpoint them. I know the coffee shop around near my office in Sydney, he's down 40%, and a lot of CBD businesses are down 30, 40% because people are no longer coming to the city working the same way as they used to. Now, that's going to have an impact on those businesses and how they invest. But on the flip side, so many other businesses are doing fantastically well. I think job ads are now at a 12.5-year high, and you don't start advertising for jobs, Pete, unless your business is heading in the right direction. So I just think the fact that we're seeing massive business investment at the moment, around record highs, that's going to continue. But there will be some challenges. And by the way, one of the reasons why business investment is going through the roof is that instant asset write-off. And a lot of businesses are using it. It came in the budget, extended, and a lot of people are using it.
Okay. Peter Switzer, good to chat. Talk to you soon.
Cheers, mate.